First things first, let's talk about how these oil and gas stocks have performed. Looking at Owando, I mean, investors seem to have no confidence in that stock at all, and I think this is a reflection of the current environment in the oil and gas sector. I mean, what's your take on this?
Well, the sector has been pretty challenged, especially in the downstream subsector. And you will find out that the entire triple PRA challenge and reconciliation going out has tended to slow down payments and has put significant amount of uncertainty in that sector. I mean, it's causing banks and financial institutions to be extremely cautious with funding that sector, and it's also affecting the marketers' trade as well. So we'll expect that investors' confidence will tend to wane because that sector is predominantly driven by the downstream sector, by the downstream market. Now, Owando is an integrated company, and as such, the structure of their business is supposed to mitigate some of those reactions when it comes to the impact on the downstream sector. It's supposed to be cushioned by their other businesses in power and gas and in the upstream sector. But, well, a lot is driven by public perception, and what the public seem to see quite a lot is their downstream business. And that might be what might be affecting them. Otherwise, they seem to be doing quite well in their upstream business as well, with new relationships and new partners and trying to develop the assets and listing in the Canadian Stock Exchange. But that's what we see.
Yes, well, Samuel, I mean, can you give us an update? Because investors certainly seem to be concerned about what's happening in terms of the subsidy payment. Give us an update what's happening. And I think that's what investors are really worried about currently.
Well, the truth about subsidy payment is that the national budget is constrained. And because that budget is constrained, there are limits to what the federal government can do in making such payments. Of course, there are assurances that they will continue to make valid payments, but the reconciliation period, I think, has lasted too long, and that has started to affect the confidence in what the objectives are. What I think is that they might make a move to try and correct this in the new budget, and so I foresee that this wane and slowdown should continue until the new budget is passed. And then major corrections will then have to happen. But I do not, in the meantime, I believe government would try to continue to pay on a rationalized basis to ensure that they do not overshoot the appropriation bill.
Well, Samuel, I mean, given the reforms that are going on in the oil and gas sector, I mean, give us a take on its relative impact on the banking sector.
Well, clearly, there are several things going on in the oil and gas sector. I've made mention of what's happening in the downstream sector. As it affects banking, basically, I've told you that the banking industry is extremely cautious about the downstream sector at this time because of the length of time the reconciliation has taken and the risk inherent in then going ahead to fund when it's not clear to you when your customers will get paid. You know, but on the upstream sector, the activities are high. ConocoPhillips is trying to divest and sell, you know, and so there are a lot of activities in that area to try and see and arrange funding for that acquisition. So it's pretty interesting days. The last time Shell's divested, it occupied the banking industry significantly. The good news is that capacity has increased tremendously since the time of the Shell divestment in terms of the skill base available to banks and in terms of capacity also, because as they divest to local companies, the entire cash flow then comes into local banks, and thereby it also increases their capacity to participate in bigger dollar-denominated deals, which this is.
Well, Samuel, let's shift our attention to the power sector. I mean, certainly there was a lot of shock when the minister resigned. And I'd like to know, I mean, how much impact has this had on the fate of the sector, or how investors are seeing the sector? I mean, we know that on Tuesday we had the NCP meeting to continue on with the progress in the power sector reform and the selling off of some of PHCN's assets. Give us an update, and certainly what is the picture going forward?
Well, the interesting thing is that the former minister did quite a good job working with the Bureau for Public Enterprise to set up a process that, in my opinion, was world-class. And as a result, there's a significant amount of confidence in that process. Now, even though the minister had to leave, I think there's still a lot of confidence in the process. There's a limit to which the process will not go through. Having said that, there's been significant interest. For example, 21 companies for 10 discos. That's a lot of interest despite all of this. So I think that the interest will be sustained. I think that the process and the integrity of the process are being closely guarded, and I think it will land safely. I think that that sector is too important to the economy to let it derail. The president himself has taken particular interest in the way that sector, that entire process will run. So in terms of status, I think they are moving forward. They are going into their financial bids at this point in time, you know, and our expectations are quite high.
Well, very quickly, I mean, I know the president has come out giving us some news about the replacement of the current minister. So can you give us an update on that if you have one? And how prepared would you say the banking industry is for the reforms in both the oil and gas and power sector?
Okay, well, I think it is the president's call. I mean, he's promised that he's working on it, and soon he will send names to the National Assembly, and we'll see how that goes. In terms of the preparation of the banks to for the growth that are being envisaged in the oil and gas sector, especially as we pursue the Nigerian content bill, I would say that capacity has increased, as I said earlier, over time, given the first sets of divestment and the fact that a huge flow from that sector now comes in country. Traditionally in history, what you find is that all the flows actually go out of the country, you know, and then that belonging to the federal government comes into the central bank, and so the banks tended not to see that, and that limited the capacity of the banks. This is changing gradually, and because of the gradual nature of just divestment and Nigerianization, given the Nigerian Content Act, you'll see that capacity will keep on growing gradually. I think that is the same pattern that we shall see in the energy sector as it evolves. Incidentally, the energy sector would have its entire flows originating in Nigeria, apart from external investments coming in. But you will see it driven largely initially from the Nigerian economy, from investors out of Nigeria, and I expect that then foreign investors will come when things become a little bit more stable.